Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 25th of March. Starting off with the S&P, where the name of the game was to wait for an end-of-day close above 5,700. Obviously, the market knew that and then gapped through that level, which is sometimes does in order to make sure that would-be bulls are not in position. Current situation is that early and end-of-day close now below 5,700 would delay the prospect of a move back up towards the 50-day moving average there at 59.14 currently. If you're cautious, you'll wait for this market to break back above the initial January support there, so that's around the 57.73 mark, but that gap really suggesting, the unfilled gap to the upside suggesting that we are on our way after quite a significant plunge that we had for February going into March. On to the Nasdaq, and here Nasdaq 100, obviously mirroring what we're seeing at the moment on the S&P, but the situation is that we have also gapped higher. Recent resistance around the 19,900 level above that. Looking for, in this case, back up to the January support there. 20,500, you can see that, relatively speaking, the Nasdaq in a worse place, presumably because of the DeepSeek aftermath than the main S&P 500. At this stage, the upside maximum really would be up towards the 50-day line, 20,000, or just below 21,000. Downside at the moment, the worst case, recent support around 19,400, but after the gap, we're not really looking that way. Moving on to the stocks and Dominaries first, and here you can see that we've broken that line of resistance there from last month. We've also broken up a sharply rising closed above a sharply rising 50-day moving average at $5.13, and also closed that gap down that we had around the $5.20 level. The longer we stay above all of that, the greater the chance of a move initially towards $7.60, recent resistance and resistance on the way down, and support previously back in February. Another situation which may catch the eye over the near future is coming up with integrated media technology. Here, presumably everyone and their mother was looking the wrong way with that breakdown below $1, and now they've got to look hopefully the right way with above $1.60, looking for the top of that channel there, or that resistance line target from way back in June or May last year. So $2.65 possible while we're above at least $1.80, which was the resistance in November, and ideally above $1.60 at worst. On to Kindly, which has an interesting chart at the moment. Not as interesting as that one, or the previous one was, but we have gapped up through a rising 50-day line for the second time. Hopefully this time the shorters or the sellers won't be as aggressive as they were back in February, but there is a chance of that, which means that one has to at least assume that we will stay above that 50-day line at $1.68. And if you are cautious, that would probably be the area for you to think of buying the dip. The upside looks to be, for the second time, towards that $3 area, at least initially, with the weak hands getting out. Moving along to Lexio, and here a nice bottoming situation here with a rising trend channel base, top of the channel there, $7.40. We're looking for that if we can get an end-of-day close through the 50-day moving average at $4.20. Otherwise, we might have to settle for looking for the shares finding support near the $3.20 area, but looks like a rising trend channel base and above $3.20, hoping that we will return to 2025 resistance. Microalgo is next, and stock we've always liked the name of, and obviously it's been a rather rocky ride, as you can see from the left-hand side of the chart, but looks as though the shares are back with a massive gain yesterday. Interesting that we've gapped up again. We gapped up for the first time in February. We gapped up again. On this situation, looks as though there is a rising trend channel base. That's around the $14.50 area. Need to see an end-of-day close through $14.50 to achieve the next level up, which would be up towards $25. So let's see if the shares deliver the goods. But that line there, a decent line in the sand for traders, and obviously we don't want to see the shares back below that February peak there, around the $11 area. Moving along to a stock which is new to me and probably new to many people, SAI Heat. And here we've got a falling trend channel, but we've bounced off the floor of it and above recent resistance at $6, looking for the shares to hit the 50-day line there at $10 maybe by the end of next month. Another unusual situation, 10 holdings, and here you can see that we haven't got much charting data to go on, so it's one of those guesswork situations which actually worked rather well in the recent past. We've gapped higher and above that gap there at $1.90, looking for the guess of where the top of the channel is there at $5 by the end of next month, but the key is obviously staying above $1.90. We don't do that, all bets on the long side are off. Moving along to tonics, and here on the rising trend channel base, it's a bear trap island reversal, so gapping down to new lows and then gapping up, which is one of our favorite setups. Above the floor of the gap there at $23.60, looking for up to $80 over the next 2 to 3 months. Minimum here, hopefully the gap fill there towards $40, the top of the gap there from back in January. Moving on to the last two, the first one a flyer, and it's Vivo Power, and here you can see that we had the gap higher on Friday, and the shares have delivered on that promise. You can see that the top of the formation there, top of the triangle there at $4.30, and obviously we're looking for a retest of that, while we're above the old resistance from last August at $2.70. So let's see if that pans out. Finishing off with a stock which was through the roof yesterday, but there is some charting detail here. The first one is that it's a key reversal to the upside, which means that above the high of the previous day at $3.20, let's call it, we're looking for a move to $4.60, which was late January resistance for the share. So let's see what XL can step up to the plate on what is a bear trap rebound from below $3.20 or below $3.30 in that case. That's it for me today. More updates tomorrow.